Hello and welcome to today's trading session. My name is Tim and I'm one of the traders here at the live trade room. And what we're about to do is to trade the US Open fully live interactive for you. For those of you who are potentially interested in learning how to trade the financial markets with a high degree of knowledge and understanding about the decisions that you make, with an ability to make consistent and disciplined trading decisions, then do please feel free to go to our website www.thelivetraderoom.com for more information. And we offer traders a vast range of products and services, all at very, very low cost. So I'm sure you'll find something there that will be suitable for you. And it's really to create traders that are informed, that are knowledgeable about what they're doing, that take the time to actually plan for trading opportunities and then execute that trading plan in a very coherent fashion. So over the next hour or two, what you can expect from this trading session on this channel is to go through the steps that we need in order to prepare ourselves for the potential moves over the course of the US trading session. And we look for high probability trading opportunities across some of the world's largest markets, from your foreign exchange markets to your commodities and also the global indices markets as well. So it is very important for us. We have a multi-asset view of these markets, so we can identify correlations and looking to stack the odds firmly in our favor when we do engage with these markets. That, along with our risk management approach and our philosophy when we trade, which is looking to cut or lose a short, but look to let those winners run. That's the very, very important part of trading these financial markets, and something a lot of new and inexperienced traders really struggle with. Whereas that for us is the pillar on which we can be consistently profitable. Okay, so let's start then with our risk warning and let's see if we can make some cash in this session. So please take a brief moment to familiarize yourself with our risk warning currently up on screen. I'm sorry about these. There's a number of these ringtones all going off at the same time. So what you may hear as well, we've got a Squawk service which gives us up-to-date information and market updates live, and we'll be broadcasting that as well through this webinar. So you'll get up-to-date market commentary as it comes in. In addition, we also have a pretty significant news event in the UK with the annual budget being released now in probably 10 or 12 minutes time. So we'll be preparing for that and see what opportunities that is likely to give us. Okay, so the first thing we do when we look to trade the financial markets is we just want to be mindful of these news events and see what opportunities are likely to present themselves. So today, Wednesday, the 3rd of March, overnight we had a GDP figure come out. It's a quarterly figure impacting the Australian dollar, and you can see that this middle column here is the forecast. We were expecting a GDP quarterly figure of 2.5, and we actually saw an uptick on that. So again, that's quite positive for the Australian economy. We've spent the last couple of days talking about the rise in commodity prices and what that means for commodity currencies like your Australian dollar, dollar CAD, and the New Zealand dollar as well. And what's interesting about this news event is we've failed to see any significant follow through. Now, it doesn't mean that that's not going to be the case. That very well may be the case in the not too distant future. But it is important to know that actually growth is exceeding expectations as things currently stand. Now, the significant news for the British pound today is the annual budget release. So we get to find out what the UK's approach, the Treasury approach to the coronavirus, the unlocking of the economy, getting people back to work, taxation, all of these things, formulate the big melting pot, which is the UK economy. And today's news event is an important feature of that. So it'll be interesting to see how the markets react to this annual budget. It's slightly unusual, of course, bearing in mind that we're still in lockdown, and we might be for a number of weeks yet, and how the UK economy is planning for growth beyond these current difficult conditions. In addition, we'll have a quick look at the ADP numbers, so that will be due out at 1:15. So that'll have potentially an impact on the US dollar. We've also got crude oil inventories. It will be interesting to just monitor the oil price during this session, and we'll see if these inventories news release at 3:30 will influence the price of oil. Bearing in mind, tomorrow we do have OPEC plus. So we have OPEC oil producing countries, along with your JMMC oil producing countries, all meeting tomorrow to see what decisions are going to be made regarding the supply of oil into the market. So those are the major news events. Anyone trading the New Zealand dollar this evening, we'll have the governor of the RBNZ due to speak about the future of monetary policy at the Economic Forum. Very important. That's really what traders and investors are very anxious to learn is the future of monetary policy. We're obviously going to be probably entering into some sort of increased rate environment, and what does that mean for debt legacy and the repayment of that debt, and all of these features come together. So be mindful of that if you're trading in New Zealand dollar. Okay, so we've got a lot to really focus on over the course of this session. So we'll start with a in-depth look at the actually first of all at last night's trade plan webinar at 9 o'clock. So we get together for 30 minutes every evening with our traders. We look across the markets, we determine and decide exactly which markets would need to take our focus from a probability perspective, that we're likely to get a high probability trade. And the two markets that we were looking at that are actually here, well, there's three of them in total. So the first market is the Aussie dollar to the upside. Very straightforward. We got this move to the upside over a week and a half ago, where we clearly broke out of this little range. I'll put this another little level in here just to identify this. It's a strong level of support and resistance. It's resistance when price is beneath, so it becomes a bit of a ceiling, and now it's likely to support prices. We did have a pretty significant rollover to the downside last week, and prices rolled over to the 50 period moving average, but we're finding a little bit of support, and we just anticipate if prices do break above the 78.37, we would just, from a probability perspective, we'd expect this market to continue higher. Plus it has that commodity cycle element to it, where we can expect commodity prices to increase, and that will be quite supportive of the Aussie dollar. So it's just formulating, it's putting all these things together, and trying to make very logical, straightforward trading decisions when we engage with these markets. And that's really what trading is for us. We're identifying trade ideas based on our understanding of the fundamentals, the sentiment, and the technicals, and we're putting these things together and hopefully presenting some high probability trading opportunities that, of course, you can take advantage of yourself. So that's the Aussie dollar. The second market, really in the same vein, is a buy trade in the New Zealand dollar. Now, it's interesting to note that we've had very little activity overnight during the Asian session, and also as we've entered the European markets as well this morning. So we are there's not really too much going on there. And what's interesting to see is that the dollar begin to take hold a little bit again, especially against the euro. Again, this is a really sort of messy type of market, and we've been trying to trade the euro dollar, but as you can see from the charts, we are pretty much in a sideways moving pattern as far as the dollar is concerned. So we're firmly within this zone, and we're just drifting sideways. So we're getting a lot of erratic price action. We know the ECB want to push prices lower. As far as the euro dollar is concerned, it doesn't like prices being above this 120 exchange rate level. It devalues the dollar and obviously makes the euro more expensive. So they're not too comfortable with that. So let's see how the dollar's playing out across the board. You can see that today's strength in the pound is unwinding. So there is this sort of dollar strength trade beginning to kick back in again. Now, we're already in the dollar yen, so we'd expect prices to continue to the upside. As long as we're making higher highs and higher lows in this market, we're very comfortable sticking with this trade. So hopefully it'll turn into a decent profitable trade for us there with the dollar yen. Sort of similar outlook really for the dollar Swiss. We have had periods and bouts of quite erratic price action in between the big moves. So we've got the dollar Swiss very close to making new momentum highs above that 91.93 level. Sorry, bear with me 1 second. Sorry, bear with me 1 sec. Okay, so just got multiple screens there. So, and what you might hear as well, we're broadcasting our squawk, so you'll be able to. It's a live squawk, and you'll be able to get market updates as we go. So we'll probably hear a little bit more about those pretty shortly. Okay. So the dollar Swiss looks like it's extending that move to the upside. So the third market really we were looking at, the first one's the Aussie dollar to the upside, and you can see we're not really getting that move to the upside. Same situation for the New Zealand dollar, and again, I mean, there's practically no volatility at all in this level, so we might still get those moves to the upside. It'll be interesting to see if we do get any dollar weakness creeping in, because that's what we were looking to trade. That would be in keeping with the equity markets potentially squeezing to the upside. So we always really want to look for coherent market conditions, and when we're trading conditions that are not that coherent, we generally look to just back off a little bit. We don't want to go chasing markets that don't really stack up for us and don't make too much sense. So those correlations are quite important. The euro dollar is taking a significant rollover to the downside, even against the yen. So the euro has gone from a position of mild strength to actually mild weakness now. So we'll have to take that into consideration. The similar situation for the pound dollar. We were looking quite positive to the upside. We either expect prices to break above the 39.75 and continue this little move to the upside, but as you can see, it's kind of failed. It's bounced off the 140. Will we start seeing some dollar strength? That is the question. We're already seeing it against the yen and the Swiss franc. So we're kind of getting rejection trades across all three buy trades that we were planning for last night. So that's, I suppose, the nature of trading these financial markets. We can react accordingly, of course, but as a result, we've not been able to get into any trades this morning so far. We're still in our dollar yen trade, which is performing okay. And we're seeing rejections across the other markets so far. That very well may change. And if it does, we can look at those opportunities. So it'll be interesting now to see with the budget release coming out of the UK. We get an update on that shortly. We'll see if there's any movement out of this pound dollar trade. This all important pound dollar trade. Okay, so with the pound here, we're looking to we're awaiting major pound news regarding the annual budget, and we'll see how the pound reacts. We might see a bit of volatility this afternoon for the pound. So far, so good with the. Can I zoom in a bit further? No, I can't. With the dollar yen. So this is still very much relevant. So we got in at the 106.80. We're now up at the 107 level, and we have a stop loss of 106.66. So it looks like the dollar is just gaining a little bit of strength off these highs. The euro yen is not really doing anything. We are sort of 25 minutes away from the open, so we can keep a close eye on that. And we've had a bit of positivity come into the equity markets today, just unwinding a little bit of yesterday's bearish price action, but it's relatively inactive, certainly over the course of the morning period. So just looking at it on the hourly, so we are firmly within this little sideways range. We could throw a blanket over this price action from yesterday morning right through to today. So really a break below this monthly low would be an interesting sell trade. Equally, a break above could give us a further momentum trade to the upside. So we can just monitor this market and see how it's performing.
Make everyone aware the transfer is checking now speaking.
So we'll get a market update pretty shortly, I'm sure, regarding the pound. So we'll see if the pound reacts. You know, for this, it's often interesting to just look at the smaller time frames. Now, we don't really take trading decisions off the back of the price action, but when you have a budget like this and you have this sort of structural level to the upside, you know, will this budget be supportive for the pound? We shall soon find out. So a little bit of sort of early doors possibilities for a potential buy trade. Let's see how that stacks up on the daily. So we'd still be looking for this market above the 139.75 level, the 39.75, excuse me. So we're not too far away from that. certainly got a nice sort of momentum low to work off. This is a structural failure to the upside, followed by a mini structural failure to the downside. So actually, it's kind of looking a little bit more like a head and shoulders. So I'm really bad at these drawings, guys, so I do apologize, but there's your shoulder pattern, and that's your head pattern there. Not that symmetrical, and that's what we look for with these head and shoulder price action, is symmetry, and we're not quite seeing that. But you know, will we get this type of price action? That would be, you know, that's what we can expect with this price action going into this head and shoulders and this price action coming out of it. So let's see if it performs as per our expectations, and if so, that will confirm consolidation, and then we can look to either buy it when we get a breakout to the upside or sell it if we get a breakout to the downside. So we can sort of monitor the pound for now. So we'll keep an eye on it on the 15-minute time frame, just so that we've got a bit of perspective on the price action there. Now this is sideways moving price action there for the British pound against the dollar.
UK Sunak here says the OBR sees the UK economy recovering to pre-COVID levels by the middle of next year. So that the OBR sees a swifter and more sustained recovery than in November.
Okay, that's obviously positive.
The OBR bringing forward that GDP return to pre-crisis levels to Q2 versus Q4 2022.
Okay, that's a positive outcome for the British pound. So you would expect perhaps a bit of a bullish bias. I suppose the markets are digesting what sort of supports need to be in place until the economy is fully back up and running, and it's digesting that, the legacy of that debt.
Forecast the UK GDP will grow by 4% this year.
Okay, that's a good bounce back as far as GDP is concerned. So the UK economy.
2022 GDP growth is 7.3% versus 6.6%. That's a downgrade for the 2021, but an upgrade to the 2022.
We all know we need to take these projections with a little bit of a pinch of salt, because they can be wrong so often. So we'll have to.
Forecasting a peak in unemployment at 6.5%.
So it does need to fix the unemployment situation. So a small bit of positivity just creeping into the British pound as a result. It just gives the appearance that, you know, the UK economy could come out of this okay. The S&P is kind of rolling over to the downside now, so
Rishi Sunak confirming the furlough scheme will be extended to the end of September.
Okay, that was very much expected. Okay, a mild bit of a pound strength as a result of the budget release, some of the headline rates, and budget headlines are now out. We've still got potential buy trades in the Aussie dollar and the New Zealand dollar, because we're only sort of 20 pips away from seeing these markets actually make a move to the upside. So we're just waiting patiently for those trades in the commodity currencies. The euro yen, we've had a really strong pullback off the highs. It's not really doing much just yet. The S&P looks like it's just rolling over to the downside, and we're close to the US cash open. So you get an influx of capital into these markets. And we'll see how they position themselves. Not to be confused with the equity open. The stock markets, they open at 2:30 UK time. So we've just got this little sideways moving price action here. So okay. So these are broadly the markets that we'll be focusing on for the session. So we've got our 3 planned trades, and nothing really is happening just yet with the Aussie dollar, New Zealand dollar, and the euro yen. Okay. So it looks like the pound could be marginally the higher probability trade for us. It's just like I was saying, we've got a structural failure to the upside followed by a structural failure to the downside.
Here saying that it's natural to expect current ultra accommodative stance on short and long-term interest rates to continue for a prolonged period.
So now we're approaching yesterday's daily high. So we do look for these highs and lows as our first sort of levels of support and resistance, and then we can work accordingly off those. So really, it's just a lot of sideways moving price action, really, over the last 2, 4, 6, 8, 10, 12, 14, 16, 18, 20, 22, the last 24 hours, let's say. So all it's done is just traded in what is a very relatively tight range, from the 139.90 level down to the 139.35. So for a prolonged period of time now, we've been sort of trading inside this 50-60 pip range. So a close above the 139.92 can certainly give us an opportunity to break out of this sort of downward range and start looking positive for the British pound again, with a relatively coherent stop loss here at the 139.35. So you would be looking at a 60 odd pip stop loss on this trade, but on the upside there's a nice move from the 139.90 level. You know, you can really see this market pushing up to these highs again, the 141.50, something like that. So maybe 150, 160 pips, which would be 2 times your risk, more than 2 times your risk. So at the moment, it's just trading around yesterday's low, which is first box really that we want to tick, and with this trade.
So UK Sunak says business rates tax exemption will continue until the end of June.
So it closed above this 139.92 is our trigger to the upside. So we do want markets to perform as per expectations, and we do want triggers. We want something that tells us that we've now got the confidence in the trade to get into that market, and that for us is a close above the 139.92. So and you've got a nice technical low, and you've got a 50 period moving average in there as well. So and we're in this prolonged uptrend, and it's really a continuation of that uptrend. That's what we're looking to trade. So let's have a look. So we've got the market open now in 10 minutes. So let's have a scan through these markets, and we'll see which opportunities are likely to give us the best opportunity. So the dollar is really strengthening now against the
Rishi Sunak here announced they're extending the stamp duty exemption until the 30th of June.
Okay, so all these exemptions are still going to be maintained. So when you're trading foreign exchange, it's important to trade strength versus weakness. And if you find a market which is strong against some and weak against others, then it's kind of pitched in the middle. So it doesn't give you the best yield to be trading markets that are mildly strong versus markets that are mildly weak. So really you want to try and leverage that extreme. And if you can be patient and wait for those strength versus weakness trades, they can be quite rewarding in a relatively short period of time. So they are really worth waiting for. The dollar yen looks like we're squeezing up to these highs up here. Dollar Swiss. It's just coming off the highs as things stand. So there's a bit of dollar strength against the euro, against the yen, against the Swiss. And then we look at the commodity currencies. How is it performing against the commodity currencies? Well, some short-term sort of bullish price action really. So we've got a little mini structural failure to the upside. We look at this on the daily, we can see what it means. A lot of sort of bearish price action as far as the dollar CAD's concerned, and actually a strong rejection of the lows now. So could this market close and maintain itself below that 125.97? The answer is clearly no, it's not able to. Bit of strength creeping into the Aussie dollar as well, the New Zealand dollar. So we're already in one of the better dollar performers against the yen, so we've been in that now for a good few days. So as long as it keeps maintaining its move to the upside, we're obviously quite comfortable to be in that. It's quite slow grinding, and one of the main reasons why it's grinding, it's just finding a bit of sort of neutral. It's quite neutral on its strength and weakness, on a strength and weakness basis. So but when some strength starts coming in, we can probably expect to see this probably continue higher. So we'll see if that's the case.
So UK Sunak says that this budget announces an extra 65 billion of COVID measures this year. The total COVID measures for this year index is 352 billion.
Like, these are really, really big numbers, and ultimately needs to be accounted for, and at some point look to be paid down. Our efforts will need to be made in order to address the debt, and there's two ways of doing it. Of course, additional taxation of cutting expenditure. So there'll be some tough decisions in the years ahead, no doubt, once we come out of this crisis. And we'd only spent a few years coming out of the previous crisis as well, so we're just bouncing from one economic crisis to another. The dollar Swiss doesn't really give us much value up to these highs. So we spoke yesterday about waiting for a floor to be created, and you could argue that
so
a floor has been
UK
created.
borrowed a record amount,
91.34
billion. November forecast was 393.5 billion, so that's less than the forecast.
Okay, so there's your floor created, and then generally what you want to do, certainly if it's a
OBR forecast
breakout trade.
2021-2022 budget deficit 234 billion.
It's for a buy trade above this little structural high in here, or if prices roll lower, then there's your sell trade opportunity, sort of clearly defined. So for now, it's continuing its move to the upside. So a floor has been created. It just excuse me, the bias is clearly to the upside. So we've actually got markets which are there's a bit of a lack of volatility in these markets. A lot of markets that are not really doing a huge amount. You know, to have a 20 pip range, you know, in some of these massive markets is it's pretty uninspiring. So the euro pound, the pound is just mildly strengthening a little bit, as you can see. So we're interested to see if we get either a breakout to the upside above the 86.64, are a breakout to the downside, and for us to be patient while we're in this sort of sideways consolidating mode. Okay, so that's the Euro Yen. So that's the Euro Yen to the downside. The Euro Pound, should I say, to the downside. The Euro Yen, it's really not showing any signs of strength at the moment. Pound Yen, so we're seeing a little bit of strength in the build-up to the budget, the annual budget release. We're just currently experiencing a little bit of a pullback. So when we look at it on the daily time frame, you're not filled with that much confidence that you're going to get the next leg higher. Gold just taking a bit of a roll to the downside. So we're actually in gold to the downside on the daily time frames.
Just
so we
the
do
same
trade.
time as those OBR figures, which I put out first, the market gauge of long-term Eurozone inflation expectations has hit the highest since May 2019 at 1.3892%.
Okay. Okay, so it's a bit you know, when we see a lot of these moves that are just kind of retracing the previous day's moves, we kind of want to see some momentum breakout where prices either break higher or they break lower, trading inside this range. So for example, tomorrow, if oil, we've got OPEC tomorrow as well, so we should keep that in mind. But if prices break above 61.10, then there's actually quite a decent high probability buy trade in oil. But until we break that 61.10...
So UK Finance Minister Sunak says he will not raise rates on income tax or national insurance or VAT.
Okay, so that's good news for everyone in the UK. So the US indices markets, they're sort of painfully sideways moving, aren't they? And they have been now for a day and a half. So the good news about consolidation is we can generally get explosive moves higher above 3,900 or decent moves lower below 3,870. So we're really trading inside a 30-point range. So that's the takeaway from the S&P 500. Nasdaq is just rolling off the highs. We're just trading inside the previous day's high and low, which is trading inside the 3-day high and low. So clarity is not great today. Dow Jones, a decent trade would be above the 31,677, but that's the 3-day high. You can see it's above today's high, yesterday's, and the 3-day high. So that would give us, and you can see the length of time that this market has spent between that 31,000 600 and the 31,200. It's been, apart from a little move higher and a little move lower, it's just, broadly speaking, it's just generally drifting sideways. Hi Ian, good to have you join us. Yeah, listen, that's fine. About 300 late. Listen, no worries. No, it's just whenever you can join us, really. So what we were explaining really was just going through some of the trades from our trade plan webinar last night. The FTSE is just rolling off this little high just in here.
Corporation tax will increase, so it'll increase to 25%.
So a really strong day, really, for Bitcoin.
So even with that increase, Sunak here says the UK will still have the lowest corporation tax rate in the G7.
Okay, so corporate tax is going to get a hike. So that's likely to take a little bit of a shine off the pound dollar. So I apologize, I'm just flipping around from chart to chart, but we're in this sort of sideways pattern. Okay, so just to recap then, we were looking at a buy opportunity for the Aussie dollar above the 78.37. So what I'll do is the 78.37, so you can clearly hopefully see it is above today's daily high. Okay, so looking for that buy opportunity above 78.37. Similar situation really for the New Zealand dollar, except it would be above the 73.12 level, just above both the 1 day and the 2 day high, plus the momentum high as well, which is just marginally higher. So it's the 73.12. So let me put this level in as well. So another buy opportunity above 73.12. Opportunity above 73.12. Buy opportunity in the Aussie dollar to the upside. That euro really does look like it's going to start heading lower. So we had been waiting for a pullback buy trade, not a sell trade, which is now what it's looking like. So question mark over that. Our dollar yen is still performing quite well. We're obviously still in profit on it, but it's just come off its highs just a little bit. the dollar looks like it's beginning to find a little bit of strength across the board now. 50% rollover in the S&P. So as this market becomes a little bit more risk off, and I think we can probably say that now. You know, we were up at these highs and now we're just rolling back over to the downside. It might add a little bit of an opportunity for the dollar strength trade. That's what it looks like so far. We're getting that bit of turnaround price action. So the dollar's strengthening against the euro. It looks like we've just bounced off these highs as well. So there's a bit of softening creeping in there. In fact, just regarding this this UK budget, we can have a look at the FTSE market, and you can see it's just, we like to have a look at the indices markets for these news events sometimes, because they can give us a bit of a heads up. So there's clearly a little bit of concern regarding the FTSE 100 regarding the budget, and we've just heard a little bit of an update on the future increase of corporation tax in the UK, and that's obviously not good for UK companies. It eats into profit margins, and you know, we're seeing the reaction that we would expect to see, which is a little bit of a question mark over the FTSE to the upside. So so that's in keeping. So it looks like we might get that little rollover trade. We've got some strength against the yen. So just to briefly recap on this dollar situation, let's have a quick look at gold. Gold is strengthening quite nicely. So it looks like we've got this dollar play. So it's the pound dollar. It looks like it could roll over to the downside. We might see some strength against the yen. Against the Swiss franc is strengthening quite nicely. Strengthening against the CAD, the Aussie, and the New Zealand. So question is, we haven't planned for an Aussie dollar sell trade, but it does give us an opportunity to do so. So this is a strong level of resistance. We might get these prices rolling back over to the 77.16 down at these lows. So it does give us the profitable risk reward, and we have the equity markets just rolling over to the downside again. We're seeing some strength come into the yen. So maybe there's a realization that, you know, all these supports, all these fiscal supports that are in place, you know, maybe there's a realization that actually they need to be paid for, and as a result we might be seeing a little bit of a flight to safety trade, or that's stacking up right now as a dollar strength trade. So that's why we're seeing gold push lower, but we are seeing the yen, looks like it has the potential to strengthen. So it does give us an opportunity to get into an impromptu Aussie dollar trade. So let's have a quick look, and you can see that this is our level of, so we're firmly getting a reversal to the downside, so we can safely say that that's the case. So we can look for a little bit of a pullback, and if we do, we can place a stop loss above the high.
So just as we're waiting on Rishi Sunak here to give the gilt remit details, bond issuance seen shrinking 49% to 249.5 billion in 2021-2022. We do have the ADP employment change from the US for February at 1:15, so just moving into 3.5 minutes. We're looking for 200,000 on a prior 174,000.
So that has the potential to impact the dollar. So again, it's just very important that you do take note of some of the major news events in these markets. So we will just hold fire for the ADP numbers just to see how they perform. But it's just looking like it's a the markets are turning into a risk-off market condition where the dollar is actually benefiting now, whereas previously
Sunak also announced an updated monetary policy remit for the Bank of England. That's with a green scope to it.
Sorry. Okay. So we don't want to get into these types of moves that often, but when you see the whole market taking a bit of a turn, and we see some consolidation like we're currently seeing here, then it really does stack up in terms of a sell trade. Now we've got ADP out in just a few minutes, actually just 1 minute. So let's see how the market reacts to that. So we prepare for this little news event. We'll just bring up. So from a US employment perspective, we've got an ADP, which is the prelude.
117,000 for the ADP employment change, coming in at 117,000 jobs added in February. Looking at the breakdown, goods producing jobs down 14,000, with service providing jobs up 131,000.
117. So we're expecting 203. So that's a significant negative deviation. So it's a significant miss. It's probably 40% miss. So is that what we can expect for Friday?
Revision to the prior there, prior revised to 195 from 174,000.
So non-farm, we're expecting 185,000 jobs to be added on Friday. Still very high unemployment rate. And the ADP, which is the prelude to the non-farm, has missed expectations by a significant amount. So let's see, does that impact any of these trades to any great extent? the gold is continuing to strengthen. So sorry, weaken, should I say? So it's seeing a bit of dollar strength through the gold market. So there's a level of support down at these lows, which is previous resistance. So just a break through this level, it would be marginally. If this market is to continue to the downside, then it does need to break through these levels. So some continued downside potential. Are we seeing that across the board against the euro? Yes. Soon to be against the pound. It looks like the dollar's strengthening against the yen, the Swiss franc, the Canadian dollar, the Aussie dollar, New Zealand dollar. So we've had that news event and it hasn't held things up to any great extent. So the dollar very well may continue on its merry way. We've got crude oil inventory later on, so just to show you what's happening with crude oil, there's that gold move to the downside. And crude oil, it was looking quite strong, but we're really just retracing yesterday's moves, so we are firmly within this little range here. So we're just up and down inside that little range. So breakout to the upside above the 61.10, potentially a rollover to the downside below this low in here, the 58.60. But we do have OPEC tomorrow, so perhaps it's not the best markets to be jumping into right now. So we can see that the dollar is continuing to strengthen. So the Aussie dollar is just looking like it's rolling over to the downside. So now we're approaching these little levels down here. So looking at that on the bigger time frame, this is what it looks like. So it's below the 50 period moving average as well on the hourly time frame. So we've got a clearly defined stop loss up these levels. It was a market that we were looking for an upside move, but it's also a bit of price action that could be argued for a downside move. So this market making its move to the upside, get a really strong pullback. We attempt to make this level, and now we can probably see this market actually extending lower in the short term. Not necessarily making a new momentum low to the downside, but a bit of a rollover, and see these prices pushing lower. So the gold market is continuing its move to the downside, so that's performing really quite well. We're still technically retracing yesterday's moves to the upside, so we're not seeing immense value just yet in the gold trade, but it's getting quite close to that level. The Aussie dollar, So if we get into this trade to the downside, we've got a technical high in here at the 78.18. So it would be kind of a 30 pips stop loss on this trade, and we could easily see a 2-to-1 profit on this trade. So we'd expect prices to push down to the low 7,700 levels. It's really a judgment call in terms of how much faith do we have in the dollar. And it's kind of been middle of the road, so has that changed? So there's that gold sell trade, and we're still sort of above yesterday's lows, 1706. Yeah, hi Simon. Could you check the New Zealand dollar? Yeah, absolutely. We've kind of been flicking through it quite a lot. Just the dollar generally speaking. So the euro dollar rolling over to the downside. So we're clearly seeing some dollar strength. We had seen some strong pound strength, and that's rolling over to the downside as well. The dollar yen's maintaining its strength. The Swiss franc is pushing higher. The dollar Swiss, should I say, is pushing higher. The dollar CAD, so the dollar strengthening against all these currencies, as it is against the Aussie dollar and the New Zealand dollar. So just to clarify, Simon, we were looking for buy trades above this little handle in here, but price action has now rolled over to the downside. So it's in a similar situation really to the Aussie dollar. Here are your strong levels of support and resistance. So it's a mirror image really of the Aussie dollar. So probably look to suggest to get into one or the other, perhaps not both, because they're both in the same position. So this is a strong level of support. This is a strong level of resistance. Prices have traded with some volatility, broadly speaking, inside this range. So it's clearly defined as consolidation, and now we've got that breakout with momentum to the downside. So a sell trade absolutely exists. You got a technical stop loss just above the 73.02 level, which is a psychological level as well, the 7,300, and I mean, prices are now down at the 72.59. We prepared for this market to push higher. It's beginning to roll over, so the opportunity does exist. So when we get the breakout trade, just to talk you through our thinking when we see a move like this, we want to see a nice sort of run up to the break. So there's your breakout level. That's the level that interests us. So we want to see, are we seeing a little bit of a move with momentum to the downside? And the answer is yes. So we've got a nice directional move to the downside with momentum, and significant volatility.
We see a temporary rise in inflation on pent-up demand. Just a reminder that Rishi Sunak, the Chancellor, has now concluded his speech.
Okay, so the speech is now over for the British pound. So we've got all these ticks. So really, the sell trade exists. We've got a technical stop loss, and we've also got a nice positive risk reward in the trade. So far so good, and we've seen the momentum to the downside. So again, that's fantastic. Now we need to see the follow through. So this is really what we're looking at in this candlestick. So we've got the first part. Do we see the second part to the downside? And if prices break below this level, then that answer is yes as well. So we're very, very close to a potential sell trade, both in the New Zealand dollar and also, so now we're getting that momentum follow through trade.
So moving into 3 minutes to the bottom of the hour, we get Canadian building permits month on month for January. Looking for an increase to 2.5%. We're just seeing here the UK DMO says net refinancing requirement for 2021-2022 would be 297.7 billion. So the UK DMO saying net refinancing requirement for 2021-2022 would be 297.7 billion. Gross gilt issuance planned for that period 295.9 billion, bigger than the Reuters poll 247.2 billion. Just to repeat that, gilt issuance bigger than the Reuters poll 295.9 billion on a poll estimate of 247.2 billion. T-bill issuance planned for 1.8 billion. DMO says they plan to hold 93 gilt auctions in the period of 21-22.
Okay, that was just a live market update there. So really the breakout trade to the downsides below the 78.11. We have these prices. We have this level here, which is, again, it's very similar to the New Zealand dollar. But we have this high just sitting in here. So we'd want to see prices break through that level. So if we get the momentum flush to the downside, we can get in if prices break and close below that 77.88 level. We can also probably get back in on a pullback if prices pull back to the 78.10 level or the 7800 level. Can give us a bit of a sell trade as well. So we're seeing that follow through to the downside for the New Zealand dollar. We're actually in a better position here in the New Zealand dollar than we are in the dollar yen. Sorry, the New Zealand dollar versus the Aussie.
On the board for those interested, seeing the breakdown: 87 billion of short gilts, 65.4 billion of medium, and 66.3 billion of longs.
Okay, so we'll take that out of the equation. So we've got a strong level of resistance in here, which is really holding up this market, and we don't have that same bit of price action in the New Zealand dollar. So we'd plan to get into some Aussie dollar buy trades, looking for that currency momentum trade, and we're seeing a move to the downside. And we're actually still seeing that move. The pound is beginning to just strengthen a little bit again. Not much movement against the yen. That Swiss franc still has to break these important levels. We're trading intraday highs and lows with all of these markets. So we're getting the momentum trade right, and now we have the directional trade and now the momentum trade. So the New Zealand dollar is the trade that's working a little bit better for us in terms of clarity. So the question is, what is our plan for these two markets? So we are going to look to get in to the pullback on these two trades. So the Aussie dollar, if we can pull back to the 7800, we'll get in, and the New Zealand dollar, if we pull back to the 72.73 level. The alternative to the pullback trade is when the market creates a bit of a floor or a ceiling. So you might get a little bit of hesitation around this kind of level, where you can identify a new level like we've done here. And this market, continues to make these types of levels. And then if we get that little breakout, then that can be a viable opportunity with a lower stop loss on the trade. So we hadn't planned for this sell trade, but it does stack up. Simon, if you're still with us, are you looking to sell that trade? Let us know what you're looking to do with it yourself. So definitely looks like there's an appetite for this dollar. So not so much against the pound. To the euro pound. So the pound is strengthening. So broadly speaking, we've had a mildly positive budget from the UK. So the markets are reacting in a positive manner. We're seeing nothing explosive, no major market moves, but just mild grinding strength, really. So what we'd want to see with the Aussie dollar is a bit of a pullback to this level, and there's your high probability sell trade. And don't forget, markets move in that sort of up and down fashion, and to the downside they'll move like this. So we will be getting a pullback at some point, and it'll be really whether we can get into that pullback to the downside or not. But this slightly turns our trade upside down to a certain degree, because we were looking for those breakout buy trades. So we don't like to get into these turnaround trades, but they are looking like they're really stacking up quite nicely with the dollar strengthening across the board. So the only currencies out of the G7 that are not performing like that is the pound. So on the monthly time frame, on the daily time frame, should I say, we're still in this buy trade, and we're also in the gold trade to the downside. So they're both performing quite well. Intraday, a little bit more tricky. We're in the dollar yen trade to the upside. The dollar against most other markets had been so we're going to wait for that little pullback trade in the New Zealand dollar, wait for the pullback trade in the Aussie dollar if we get that opportunity. And the reason why we're being a little bit more cautious with the sell trade is because we hadn't prepared or planned for that sell trade. So now we want it to give us an opportunity to get into it, pull back, because we have extended a reasonable amount to the downside. If we were looking to get in around the 7,800, we're now down at the 77.90 level. So it's reasonable to expect a 10, sort of 12, 15 pip pullback in this trade. And if it doesn't, if it just continues to fly, then kind of so be it. The 72.52, and we've got so we're talking about a 10 to 20 pip pullback in the New Zealand and the Aussie. And if we get that little rollover trade to the downside, then we would then regard them as high probability sell trades. So we do need, unfortunately, it's gone past half. It's gone past 1:30. So we do need to let you guys go, I'm afraid. It's just that pullback trade on the New Zealand, and again, we've been looking for buying opportunities, and now those are pretty much off the table. We're looking for those pullback trading opportunities in these markets now, with this dollar strength coming in. We don't normally take these types of trades, so it's a little bit more speculative. The euro seems to be really rolling over lower, and the S&P. So the strength out of these indices markets are just. This is probably why we're ultimately seeing this little dollar strength trade. So looking at the equities, there's a strong rejection of these highs, and these are potential sell trades as well. Honestly, the picture's a little bit skewed. It's a little bit strange today. But instead of trading the indice markets, we can certainly get into this dollar strength trade, which is what we're going to focus on. Seeing if we get in on a bit of a pullback on these two trades. So look, I do apologize. We do need to let you guys go. Sorry, let me put that back up. So it'll be a focus on a pullback trade in the Aussie dollar and the New Zealand dollar, both to the downside. So that's really what we're going to try and run with for the afternoon, and just see what's happening elsewhere, really, because it feels like there's a lot potentially happening, and markets are on a bit of a turn, but we will see if it materializes, because that's been the problem this week. Really, is the clarity behind the moves has not been fantastic. So look, hope you enjoyed this webinar. If you do want more information about what we offer traders, do go to our website there, www.thelivetraderoom.com. For more information. We've got really sort of high quality education and mentorship and daily trade rooms, all at very affordable prices. So do have a look there, and please do give us thumbs up if you can, and subscribe to our channel, and we'll notify you when we go live at points in the future. And we will have we've got a whole host of content that will be coming online as well, so we'll be able to send you those videos also. Okay, so look, thank you very much for joining us. From everyone here at the Live Trade Room, take care, and we'll speak to you soon. Bye for now.